Friday, over 30,000 on the Dow Jones. Want to explain that right away? I think most people by this time listening to the show know that the Dow Jones is just 30 stocks, and one of those stocks had a really good week, and that was Disney.
Yeah, Disney Corporation was up 14% on Friday, hit a new all-time high. They held their investor day on Friday, and they announced that essentially a goal that they had pinpointed for 2024 was reached within a year. That I'm talking about is Disney Plus, got to 90 million new subscribers. They then tripled their target for 2024 from the original 90 million goal to 230 to 260 million. And when you add in what they expect to have in terms of subscribers for Hulu and ESPN Plus, we're talking about 300 to 350 million subscribers by 2024, which essentially is where Netflix is today. So Netflix still has a lead, but Disney is closing the gap pretty quickly. And then on top of all this, they announced they have several pending price hikes in line, which of course investors love because that just goes straight to the bottom line.
And Danny, as you well know, being in the content industry, when you have content and you put that on top of the number of listeners and viewers they have, I mean, you have something.
Are you into the Mandalorian thing and all that? Apparently there's spin-offs of that.
Right.
They've got a ton of other content. Our director of marketing is big into this, and he was going on and on what they've got in the pipeline. So it looks great for them.
Yep. So Disney had a nice run, and of course, as a member of the Dow Jones, kept the Dow Jones over 30,000. But I want to go back from 30,000 feet and really talk about what we're seeing.
Well, Dave, I think what we're really seeing now, since the election, as we talked about prior to the election, a lot of money is now finding its way into the market with interest rates remaining very low. But as a result of that 11% rally in November in the S&P, 18% rally in the small cap index or Russell 2000, we're starting to see some optimism become somewhat excessive in certain areas. So I think that might be a little bit of a risk factor in the short term, particularly as we look towards that January 5th election in Georgia and just what is oftentimes seen as a year-end rush to the close. In other words, we rally post-Christmas into year-end. It's a seasonally strong period. I think you just have to be a little more selective and pay attention to what you're paying and why.
So there's not a thesis change. It's just that there may be pullback. Sometimes there's a pause that refreshes. But you take all of this optimism and you put an IPO market on top of that. You well know that back in the late 1990s when you were managing a tech fund, you saw a lot of IPOs, and we're seeing a lot of IPOs now. Do you see any difference?
Well, I've had any number of clients in client meetings in the past couple of weeks ask me about that. And what I will say is when we were doing that tech fund in 99 and 2000, in the year of the tech bubble, the IPO index on a trailing one-year basis was up 350%. We just looked at it the other day on the day that DoorDash came public, and right now we're looking at up 100%. So new IPOs are actually generating a lot of investor interest, but it's nowhere near as excessive as it was in 1999 and 2000.
So we mentioned DoorDash. Dash ended up 86%, and Airbnb also came public. But I want to caution people about how this really works. There's the primary market where people go into it before it goes to the secondary market. In other words, where it can start to trade. And so if you're in it before it's traded, you get that big pop on the first day of trading. But we saw the number of those stocks, once they start to trade, the pop was already taken.
That's oftentimes the case. I mean, we did look back on that as well. And generally speaking, when you have a large market cap company that doubles on its first day of trading, the following month they've tended to trade very well, like Snowflake has actually done since it came public. But after about a month, it tends to ease off because people start to anticipate the lockups. That's when more shares become available. And that's simply a supply-demand issue. The company can be executing on all cylinders, but if you vastly increase the amount of supply of stock that's available to be traded, that does put some downward pressure on price. So you really have to, do some work. Don't just sit there and buy something because it's going up and you're real excited about it. Anticipate that, and that's typically 6 months after the IPO date.
So optimism is still there. The thesis still intact. Again, as you pointed out, Derek, we're certainly watching what is happening in Georgia in the first week of January, which could possibly change the thesis. But now is the time to know what you own, why you own it, and how much you're paying for it.